Well, the RBI has hiked the key interest rate by 35 basis points. And what does this really mean? Well, every time the RBI raises the repo rate, the banks pass on the hike to consumers, which means that the lending rates of banks are now expected to go up. EMIs on vehicle loans, on home loans, and also on personal loans will now rise for you. Banks have already been increasing the benchmark lending rate since the month of May, from the time the RBI started to move up this repo rate. Now, this is the fifth time a repo rate hike has happened within the last 8 months. Now, the recent hike in the key lending rate has also led to an overall increase by a total of 225 basis points since the month of May this year. Now, a 225 basis points increase in the last few months really means that the borrowers who were really paying about 7% interest will now be paying upwards of 9.25% interest rate. So now, for example, consider that somebody really took a 30 lakh rupees home loan for a 20-year tenure in March this year. Now, a hike in the EMI really translates to an increase of 17.75%. If the same loan was taken, however, for 30 years, the EMIs would now increase by about 23% for you. So there is a jump. 17% to 23% is the broad range within which your EMIs are set to go up because of this cumulative rise of 225 basis points that we've seen by the RBI. So what should borrowers ideally do to now reduce the impact of this hike in the repo and therefore the hike in your own loans and your EMIs? Well, one, experts say that prepaying your home loan can really help shorten your tenure of the loan repayment. So that could help. Experts say that if you pay about 5% of the loan balance every year, you can actually pay off a 20-year loan in just about 12 years. The next option could be increase your own EMIs. If you increase your EMI by say 5% every year, you can finish your home loan in less than 13 years, and that could also save you some money. Lastly, you could also consider refinancing of your loans. In case you have a loan from a bank which is actually charging you higher interest, then you can compare this rate with another bank or your own bank with the new rates as well, and then see the difference. If the difference between the previous rate and the current rate is about 50 basis points within two banks or within the same bank, then it definitely warrants a look for you. On the flip side, this repo rate hike that is done by the RBI now could really mean good news for depositors. SBI, the largest bank in India, for instance, now is offering 6.1% rate on the 1-year term deposits as well. As of now, about 38 banks offer the FD rates of 7% or more on the varying tenures as well. Although the deposit rates have really not managed to keep pace with the kind of lending rate moves that we have seen because of the repo rate hike, they have gradually started to move up now. So watch out for if your bank also moves up that FD rate, and maybe it makes now more sense for you in case to increase your investments in the fixed deposits as well.
If you like the video, do like, comment, share and subscribe.